Welcome to Housing Developments.
I'm Jim Tobin.
And I'm Paul Lopez.
Paul, how you doing?
I'm doing well.
Yeah, it's been a pretty eventful week.
Yeah. It's going to be, I think, a quicker podcast than normal.
Yeah, yep.
But we do have some important data that I think we need to share.
Yeah.
To talk about a little bit about what's going on with the economy in general and housing in particular.
That's right.
I guess let's start off with the Wells Fargo National Association of Home Builders Housing Market Index. Big jump there.
Yeah, big jump up to 55 points. Last month we were at 50.
Yeah.
This is the 6th month in a row that we've had an increase after 12 months of declines in 2022.
Yep.
So this is good. It's a good forward indicator. We know what the index means, but it's great to see the members moving to positive territory and solidly in positive territory, which I think bodes well to what Rob Dietz has been saying for the last several months, which is the back half of 2023 should be that rebound we're waiting for.
That's right. I mean, if you look at the different components, the two biggies, present sales and future sales, they're up to 60.
60, that's right. Yeah, big jump there. Like I said, it just seems like I think we finally turned the corner, certainly from negative territory, but just the kind of the pace of these jumps has been welcome.
Yeah, and it also looks like our members and other builders, but our members in particular, are so buoyed by what's going on that they're kind of bringing back a little bit and reducing the incentives, right? I
saw that. Yeah, that the number of builders offering incentives, and then the amount of the incentives have definitely fallen back off of, I guess, their highs over the last couple of months. So that shows to me, at least, that buyers are out there. They're willing to pay the prices, but more importantly, they're looking at new homes because
inventory is low on the existing.
That's right. And so new homes are taking up that bigger portion of it. Newly constructed homes
right.
are taking up that bigger piece. So bodes well for the home building industry moving forward. Of course, cautiously optimistic.
Always.
I think that's what we have to be. But talk a little bit too about why all of a sudden interest rates have been kind of this bouncing back and forth, sometimes higher than 7, definitely higher than 6.
Yeah.
Why do we think that interest rates are less of a factor, more of a factor?
Well, I think everyone's seeing this as the new norm. I think for a while there's some people expecting, this is a temporary as inflation keeps moving up. But I think people are realizing and I think starting to feel more comfortable with the idea.
Right.
I may not be able to buy as big of a home as I wanted to, but I can still afford a home.
Right.
I just have to reduce a little bit in terms of size, maybe look at a little bit outside of the area that I was looking for before. All those factors, but people want to buy a home. And that's what they're showing us.
That's right. Yeah, it's good. It's certainly good news.
Yeah, and the beauty of it is when we looked at all the regional numbers, every region of the country was up. It's not like the South, which is our biggest region that we look into. Every region was up in terms of their enthusiasm for where housing's going. So that's really great.
Yeah, especially since we're in the teeth of the summer selling and building season. So a lot of optimism.
Yeah. And then right on cue, and just as the HMI should predict, the starts and permit numbers came out today.
Yeah, both up. Where which
numbers.
Follow the HMI, right?
That's
so
right.
So give us the numbers.
Okay, well, I mean, these numbers are a little bit insane. Up 21.7% seasonally adjusted. We're up to 1.63 million units. That's both single family and multifamily. And let's talk about multifamily here for a second there. Like, that was the one sector that we thought was going to be weak this year, and it's still going like gangbusters.
It's still going like gangbusters. Obviously capital is still flowing to the sector. The debate is what size is that capital and what are the projects? I mean, we've heard from larger multifamily developers that they're not seeing that growth in the sector, but somewhere people are building, whether it's garden style, more suburban apartments. We've seen that switch from the city centers in multifamily development moving out into the suburbs. So it's one of those. It's one of the indices that seems to be defying gravity in a weird way.
No, amazingly so. And then you look at single family, that was up 18.5%. So between the two numbers, I mean, they knocked it out of the ballpark. I think the estimate was some sort of expectation of up 1.5 to 2%. Right. And now we're talking about double digits. Nicely in the double digits.
Yeah, and that's what we need, right? We want to see supply coming online. That's a big portion of what we've been saying, which is if we're going to solve the housing price issues we have and the affordability problems we have in the country, it's got to be more supply.
Yep. And Rob Dietz would hate us if we didn't mention this. We're still down about 20 to 24%, depending on what number you're looking at in regards to last year-over-year numbers. But it's a great sign. I mean, like we've been talking about, the direction is going in the place that we want to go.
That's right. It's one thing to see starts, but to see those permit numbers too. That obviously that's the most forward-leaning of the indicators.
That's right. And,
so that's going. That's well.
Yeah, and permits were up 5.2%.
That's awesome.
Yeah,
that's awesome. But one of the things we talked about is the inflationary environment, right?
Yeah.
And so the real question is whether the housing starts numbers and the permit numbers are a forward indicator of more inflation on the. What's your take?
Well, having spoken to Rob, the fact of the matter is that all this inventory going into the pipeline is only good news, right? Some pundits are saying that because of the increase in housing, you're talking about the parts that go into it, that's causing inflation. That's already been priced into everything. So it's all good news that we're piping in more inventory into the marketplace. That's actually going to be a deflationary action. As the more supply you have, the more you have to choose from, and there's competition. Prices tend to go down.
Yeah, so I'm with you. I think this is what we've been waiting for, and hopefully more to come. But a big jump in starts and permits bodes well. Again, coupled with the HMI, things are looking like that optimistic for the second half of the year.
Absolutely. Yeah. And then one final thing is the Fed action or lack thereof last week.
Yeah, we talked about it. We talked before it last week.
That's right. We kind of were trying to predict it, and we were right.
We were right. That's right. So pause. The Fed paused a rate hike for this cycle. They'll meet again in 6 weeks, and it was highly anticipated that they would pause, but I think more importantly what they signaled is this may not be a permanent pause, that they do reserve the right to come back and maybe increase rates in the July meeting. We'll see if that happens. Traditionally, then they take another pause over the summer or in the deeper part of the summer. So we could see maybe a quarter point. It depends on how the inflation numbers, they're coming down. I think the Doves won this time. We'll see if the Hawks don't reassert themselves in 6 weeks from now. But, I think there's an optimism. I think, interestingly enough, the HMI number, the balance of that survey was done before the pause. So I'm curious if the respondents react favorably to this pause.
Yeah, absolutely. And I think we'll get a little bit more insight this week because Chairman Powell is on Capitol Hill.
He is.
He's on the hot seat.
As well as some of the other governors. Yeah. So it's a big finance week, like you said.
Yeah. So hopefully when we report again next week, I think we'll have a better sense as to at least which way he's leaning. I think you're right. The tendency is to add another 25 basis points.
Right.
This number kind of show that housing is still buoyed. Which is amazing.
Yeah, well, remember, inflation is still at 4%, which is 2% higher than their target rate. Number one. Number two, shelter continues to be the biggest component of that core inflationary number. So hopefully, the Chair Powell sees these increased numbers as a reason for maybe inflation finally, and certainly in the housing market and in the rental market, is slowly starting to come down as well.
Yeah. From your lips to God's ears.
That's right.
I think that's it. I mean, it's short and sweet.
Yeah,
this week,
short and sweet. It's a bunch of good numbers, and look forward to next week's podcast.
Nothing on Capitol Hill that you want to touch on?
It's appropriation season, so we're in the post wound licking portion of after coming up with the deficit. Or the debt ceiling. So now there's this war inside the Republican Party about we didn't go far enough, we went too far. Right. But now we'll kind of settle into a couple things. They'll move some things forward, but we continue to be active up there as always.
Awesome. All right. I think that's it for the weekend.
Yeah, thanks. Good seeing you.
Good seeing you.
All right. Until next week, I'm Jim Tobin.
And I'm Paul Lopez.
See you.
Take care.